Active Investor here, bringing you another independent analysis. This time we're taking a look at ticker symbol SGY, that's Stone Energy Core. The chart we're looking at here today is a 4-hour chart. Each candlestick on this chart representing 4 hours of trading. So we go back all the way to the start of the reverse split. That's where I wanted to start this chart off. You can see that reverse split is labeled here in the corner. It's that little purple circle. So we had that reverse split, and I believe that was 1 to 10. And most stocks, after they reverse split, they honestly kind of downtrend, and a lot of the time they consolidate close to their pre-split levels. SGY was a rare exception in the fact that it didn't do that at all, and it did pretty much the opposite. Instead of consolidating down by 10, this thing ran up well over 500% in the span of what was it? Probably about a few months. Reverse split was on 610, the high right around 712. So over the course of about a month, a little over a month, this thing, this thing ran big time. But it's been downtrending for a while now. Let's see, started the downtrend on 7/15. So actually, it's been downtrending for about half a month now. Pretty sad considering the momentum this thing had and the gains that it produced. So let's take a look at some of those key levels that it should maintain and hopefully get back to. So we'll just start right from the top. That first pivot point is going to be 2280. 2280 right up here. And the second one down next is 1925. 3 more to go. Next one moving on down, 1350. And slightly below that we have 12 flat. And then a ways down again, we have 875. So 2280, 1925, 1350, 12, and 875. Those are the main pivot points that we have. And remember, this is a 4-hour chart, so we're not really looking at the intraday movement. There are plenty of intraday pivot points, but these are the main levels that we need to see this thing hold or get back up to. So ideally, we would stay above $12 in this range. We have this consolidation from about 1350 to 12 here. This was a channel that we were in for quite a while. You can see we bounced off 12, pushed up a little above 1350, came right back down, 1350 as support, fell back down. We opened here and then fell back down, and then we just kind of channeled and drifted off back down below. So we're making lower lows on this chart, which is not good. And we really don't have any strong support between $8.75 and $12. You can see the run here was so powerful that we didn't really have much of a pullback. There was a slight bit of consolidation here for about a day, so we might have some very, very soft support somewhere around the $10.50 area, but really it would be super soft support, so it's not an actual pivot point. So if we don't get a change in the trend soon, I could easily see this coming back down to $8.75. So this has been a great longing opportunity after the reverse split on the way up. And it's been a great short opportunity from 2280 all the way down. It never, after it broke 2280, it never came close to it again. It came to about a little over $20, and just continued downwards. Slight pop there, but just absolutely a very powerful downtrend. So let's just see. I haven't actually drawn a trend line on this thing. Let's just kind of see where we might find some areas that we could kind of bounce off. So if we draw a trend line on here, this is a pretty accurate one. You can see we were kind of bouncing off here for a while. We did push above this trend line, but the support at 2280 didn't hold. Incidentally, the area where it needed to have hold was that same pivot point that we just drew. Well, that we already had, rather, at 2280, and it lines up perfectly with that trend line that we just drew. You can see it bounced off here, got denied, fell back down, almost came up to test that trend line again, but didn't have enough momentum. And then it came close to testing it again here, but once again, not enough momentum. So, as you can see, I mentioned earlier in the video that we would like to see this push back up to $12, and this downtrend is indeed telling us that as well. If you notice the candles here, these are 4-hour candles, so we have basically 2 days to kind of push back to $12. And that's going to mean that this trend line is right around the $12 mark right here. So in the next 2 days or so, if we can get some candles pushing back to $12, not only will we find support at $12, hopefully, but we'll be breaking above that downtrend line again as well. Now, the longer this progresses, the more dangerous that's going to be. If we start testing that downtrend line here, Well, we're already quite a ways away from that $12 area, and it's looking more and more likely that we'll make lower highs, lower highs, lower highs, and lower lows all the way down to 875. So really, SGY, we want to see it push back up to $12 and break that trend line, and then start working its way up to 1350. And then hopefully this time it's not just going to push from 1350 to 925 so fast, but we'll see it push up, have some pullbacks, or rather some consolidation, find some support, and then go up. It was a little bit too much of an increase here, too much too soon, and it just never really made support to hold. So that's the problem with this. And last thing to take a look at is the RSI down at the bottom. You can see we are oversold. We want to break up from oversold in order to try to trend back up. But you can see here, we broke up from oversold, and we did actually go overbought over here, but we stayed overbought for such a short amount of time that we didn't really hold support. And if we take a look, the area where we went overbought here, so far away from this area. Rather, this whole, let's just kind of highlight the whole area here. So we were overbought this entire channel, this entire range rather, and then this area where we're overbought much further down below. So not good. We want to see this start making a higher overbought area. So if we do push back to 1350 and we go overbought somewhere up here, it will be higher, and then the trend can definitely not only break that downtrend line, but start making higher overbought areas as well. And that's what our technicals will be telling us, that this thing is bullish again. Lastly, this 50 period moving average, that yellow line, you can see the whole time our candles are above it and the other two averages are above it. That's when we can trend up. We had the convergence and the bearish cross of the 20 and 13 period averages there, and then both crossing there as well. And now we're below that 50 period average with our averages and the candles. So ideally, we cross back above this 50 period average as well, but that's going to be the final step. The first step is breaking this trend line, finding support at $12, pushing up to 1350, and in the amount of time it takes to do that, we will see this 50 period average coming down. So it's going to be more and more likely that we can break out from there again and push our way back up. Just remember, we need to find support in this channel somewhere, because 1350 to 925 is just too wide of an increase to have like we did here. We'll never find support that way if we just keep shooting up like that. So that's my opinion on SGY. You guys know what needs to be done to see this thing come back around. For now, I wouldn't be longing this. It would still be a better short than a long in my opinion, but I'm not giving you any investing advice. Obviously, I can't do that. I'm not a registered financial advisor, etc., etc. This is strictly my opinion, and in my opinion, this thing is still pretty bearish. So let's see if it comes around. We know what to watch out for, so let's keep an eye on it for those signals. Hope you enjoyed this video. If you did, please leave a like and subscribe if you haven't already for more content like this. And feel free to join us in our chat at any time. We're there 24/7, actinvestors.net. You're welcome to come there and discuss stocks and trading with us there. So hopefully we'll see you around. Have a good one.